Hello, YouTube and their crypto enthusiasts, and welcome to another episode of Equibit Crypto. Today, we are looking at BTC as it is doing a little bit of a correction again. We're almost can call this more than a correction, at least a severe correction, and is, of course, all about what we've been talking about the last few months, inflation, and how inflation in the short term is bad for Bitcoin. I lose subscribers every time I say that, but I am correct. So we can say that the situation we are in now is not very similar to the dump we had back in April, as the case were in April that people were putting Bitcoin onto the exchange to sell them. What is happening now is that a few people are panicking and they're selling off some Bitcoin that were already on the exchange, while some other people is just gobbling it up. As we can see, the number of Bitcoin on the exchange available for you to purchase is constantly dropping. So we can say there's a big divergence between the amount of Bitcoin available on the exchange and the price action. When did we see this the last time? That was around uh, here in October, or it happened during September. We saw there were a large amount of Bitcoins being bought up during August and September, mostly in September. The price were falling, and then we got to one point where we really got into a small bull run through October, and after that, we saw the Fed come out with their plans to fight inflation, and the market is reacting in a negative way as the free money train is over. But we say that someone is still buying all the BTC slowly, just accumulating. There are sometimes we see some BTC flow into the market when the price jumps a little bit up, but this is clearly being bought up. So with the danger of repeating myself, I am going to do it anyway because this is really important to understand is why inflation in the short term is bad for Bitcoin. The reason for this is that when we see high inflation numbers, that indicates that the Federal Reserves are going to try to fight inflation. So Bitcoin would do really good during high inflation if there were no danger for the Fed coming out and doing tightening money policy and actually try to fight the inflation. So that's why we see the correction now. It's because the Fed said openly that they are going to stop the free money train. They are going to ease back on quantitative easing faster than what they plan to do because inflation is getting out of hand. But there is a but, and that is that inflation is probably going to go down to roughly 3% on the official numbers after the Fed tightened things up. But that is still 1 whole percent more than what we've been seeing through the last 10 years, where we had about 2% inflation or underneath 2% inflation every year. So I think this decade will be a decade of a little bit higher inflation, and I think rates will eventually get stable at a few points up from where we are today. We cannot be in an environment where we have zero rates forever. So we might see a little bit more pain for Bitcoin as we wait for the Fed's action to actually calm down inflation and for rates to stabilize. And then we're probably going to see another bull run for Bitcoin, a massive bull run. But there is a reason that the rates cannot go up too high, and that is here. So here we have the total US federal tax revenue. That's about, yeah, large number. But let's just call it roughly 4 trillion. And here we see the interest on the debt, which is about 421 billion. So that's about 10% of everything they take in taxes they need to use to just pay debt. So if they increase rates too much, this number is going to go up significantly, and they would need to increase taxes a lot. And that means that you won't vote for the party in charge the next time because you have to pay too much taxes. So they will try to keep rates little bit low, to avoid paying too much interest on the debt, because they are already spending more money than they have. So if this increase too much, then they have less to spend on other things. So that means that the Fed chairman would get fired if he increased rates too much. They would rather have a little bit of inflation than to increase taxes too much, because then they lose power. So rates might go up a little bit. Say rates go to 3%, but if we have inflation over 3%, that still mean that you would lose money by just holding it in a bank account. So things on the long-term scale actually look really, really, really good for Bitcoin. Imagine that from 2010, Bitcoin really increase in value on average with 100% year over year, and that was at with low interest rates, roughly I think on average 2%, and inflation at 2%. So you were not gaining any money by putting it in the bank account. So imagine what will happen if, say, if we can get inflation down to 4%, but interest stays roughly at 3%. That would be really, really bullish for Bitcoin over the long term. And I think we will see Bitcoin appreciating more than 100% year over year. Because that is when crypto do the best. It's when you have low interest rates, and high inflation that no one is trying to fight. So the acceptable number for inflation have been 2% year over year, but now they are saying that they are willing to accept a higher inflation. So long term, this is super bullish for Bitcoin. And the only way out for the United States, this is very important. So please pay attention to this. The only way out for United States at this point, with this high percentage of debt to GDP, is a soft default on that debt. That means increasing inflation and increasing the money supply. What they've been doing since 2010 is increasing the money supply with quantitative easing, and the inflation have been offset by the rapid development in technology, which is deflationary. So they've been able to print more money, debase the currency, debase the US dollar, because the deflationary effect of increased technology have been so severe, because as you get increased technology, you really the companies uh, cut their costs. This is a little bit advanced to understand, but just remember that technology is very deflationary, and the more rapid technology is developing, the more profit it generates for the companies, because they are enabled to cut their expenses. Just think of self-driving cars, what that would do for the companies who are transporting goods back and forth between warehouses. They do no longer need to pay drivers. So that means that everything they used to pay drivers, that is now just part of their profits. So that is very deflationary, and AI will be very deflationary because it will cut the cost of labor to a minimum. So I do think we are going to continue to see this rapid technology development, and that would enable the Fed to do more QE. But right now, things are running a little bit hot. They printed a little bit too much in a short while because of this crisis we were in. So now interest rates have to come up a little bit, but they also said that they are willing to accept higher inflation to get out of this debt crisis. So that's enough of the macro stuff. Let's look at some TA and the price of Bitcoin. Right now we are on the monthly scale, and as you can see, Bitcoin is forming this triangle here on the monthly scale. It only have two touch points so far. Normally we don't break down on the second touch point um, of a ascending triangle like this. It can happen. Let's see what the target would be if we actually did so. It's going to be we're on the logarithmic scale here, so it's going to be bad. I do not think this will happen. There are too much support levels on the way down here. And to the upside, how would that look? That would look more like this, 90K, which is always been the target I had for this bull run. Uh, so the blue line here is the most important right now because that is the support for this bull run. And as you can see, I think we touched it almost today with a wick. So this is very important that next week will be an up week for Bitcoin and that we do not break this bullish trend that we're currently in on the monthly scale. So right now, because the resistance is all the way up here at about, well, next week it will be resistance 70K. We're not going to push up to this next week, that much is for sure. But this line represents resistance, this orange line. So right now there is or next, this is on the monthly, so that would be next month. Um, so right now on the monthly scale, we are hitting support, and there might be a trade on the monthly from this point where we are at now. Um, to up to this point here to the orange line over time. So that might be a trade. Of course, you would need to have your stop loss underneath this blue line on the monthly, because we can say that this blue line go all the way back here, and we got one touch point here. We came down, we didn't touch it, but we came close to it uh, in um, in July. And we also have uh, this line going all the way back to 2015, acting as support on the monthly. What price level is that at now? That is at about 20K, a little bit above. So I do not think this line here will be broken in the near future. We might come down and retest this line um, at around 30K this year. That is possible, but I do not think this line here will be broken. What is possible is that we will come down and test this EMA ribbon on the monthly in the near future. And let's see where we did that the last time. That was back here in 2019. We bounced off it, and then we had the crash from the pandemic, and then we went up. So if we pull out the Fibonacci tool and we pull it from the top to the bottom, not like everyone, well, many YouTubers doing it in the wrong way, we can see that we are just below the golden pocket on the monthly. There is still time left in the month, so if we could push into the golden pocket and close the monthly in the golden pocket, that sets up for a really good month in February, and we might see a pump to the upside again, and to retest this the top of this triangle here sometime this year before the summer. I think we're going to see. Um, I think we're going to stay within this triangle. Maybe we will see a wick below, and then we're going to go to the upside as things calm down. But it's still possible we have to come down and retest the EMA ribbon here at roughly around 36,000 before we see another pump to the upside. But I am thinking that we might just see a wick down and then a close within the triangle, but nothing is for certain. On the weekly, things are not looking that great. I mean, we're still at the same support here on the triangle, but on the weekly, we need to adjust this triangle a little bit here. So we do not really have enough touch points on this triangle yet. Yeah, well, we do actually, but so on the weekly, we see we just touched support here almost, and hopefully we will get a bounce of this line on the weekly as well. And we are below the 50 moving average, which is not good. We've really not been this far below the 50 moving average, and we need to get back above it quickly. We can see we barely broke it here on this candle, but I would consider this a bounce off it. So this is the first time in this bull run we are actually breaking the 50 moving average on the weekly, which is not good at all. So this will probably act as resistance. So right now that would be resistance at 48k. That might be a time to take some profits, especially if you go into a trade here of this support and go up to this to this line here, the 50 moving average. That will probably be some severe resistance right there. We also need Bitcoin to come up here for this week and close within the EMA ribbon. I think we've done one close, yeah, right here below the EMA ribbon. In this bull run, but that is not a good thing to spend too much time beneath the EMA ribbon on the weekly. That might indicate that the bull run is over and we're going to see some more pain for Bitcoin if we cannot climb above this last EMA ribbon here. And get into the EMA ribbon again, and then hopefully, of course, break the 50 moving average and climb above the EMA ribbon. That is what we need to pray for. On the daily, we need Bitcoin to break this current downtrend first and foremost, and then try to start turning the moving averages and getting some golden crosses. But we do see a lot of the support is coming in here. On the VPVR, it doesn't look good at all. Um, we see there is huge resistance up here at 47,000, and that also coincides with the moving average we looked at on the weekly. So I think this might be a time to, if you go into a trade now, if you try to catch this falling knife, I don't recommend doing so. Um, but that would probably be a good point to get out if you're doing a trade. Of course, we're not selling Bitcoin ever in our hodl position, but trading is allowed, and then you should take profits if you are in profit, and you should do so when heavy resistance come in. And as you can see, we have some resistant cluster here around 47,000. Yeah. So I think that's it for today. If you found this video useful, please subscribe and like the video and ask any questions below in the comment field to really trigger the YouTube algorithm, and feel free to share it with your friends. And I'll see you next time. Bye for now.